assessment of the growth number that they've given, or is this fair?
No, as I mentioned that, there's a lot of moving parts in terms of growth and inflation forecast, but I think the risk to RBI's 6.5% also looks to be on the downside at this point in time. This obviously will emanate from a much higher risk of global recession that will possibly happen as early as 6 months in case if these global tariffs are maintained. So I think to a large extent, India would not only face the uncertainty risk with regard to sentiment, but also with regard to actual hit to the real sector. So I think to a large extent, I believe 6.5 looks to be also an optimistic number. But on inflation, I think pretty much on the same page as the RBI, there are push and pull factors both on inflation. But on net, I believe that the disinflationary impulse will be the dominating one, which will basically emanate from much lower global commodity prices and possibly a supply cut of goods that China may dump to the rest of the world, and especially its trading partners in EM Asia. And as I said, historically, India has never been non-synced with emerging Asia in terms of cyclical downturns. So it's unlikely it will outdo emerging Asia in terms of cyclical positioning.
Okay, Anubhati, would you agree with that in that because these are slightly unprecedented times and the tariffs rates are different, as well as how the economies are per se in terms of the quantum of exports to the US or otherwise are different, that India will be joined at the hip to emerging Asia? Or could it be different if the tariffs stay for longer? I mean, final word with you, Anubhati.
Obviously, in the current environment, it is very difficult to be disjointed with rest of the world and emerging markets in general, because the theme which is driving every single country is what happens on tariff front, how long it sustains, will it cause a global recession or a US recession, will it lead to disinflationary pressure across emerging markets. So I think there will be a fair bit of association or co-movements between what happens to the emerging market at large and what happens to India. But India is definitely in a far better place because the extent of tariff imposed on India is lesser relative to, say, several ASEAN economies, and also because our exposure to US in terms of exports or goods exports is not as high as some of the other ASEAN economies. So yeah, relatively better place, but probably those advantages would play out over a slightly medium term. In the immediate term, I think India will continue to move in line with what's happening to the emerging market space at large.
And that pain seen in the markets today as well. Thank you to all of you for joining us on this conversation today as we break down the messaging coming in from the Reserve Bank of India, the policy completely fitting the bill in terms of what was expected by the street. A 25 basis point cut, yes, that has come in. Stance changed from neutral to accommodative. That is something that was also expected as well. The markets, though, going through their own level of stress, and gold loan companies in focus. I think this is important, Neeraj. Look at Muthoot Finance, now 9% down. Top loser on the street. Manappuram, interestingly, not that bad off. But the initial commentary coming in that Muthoot, as one of the largest players, has already adhered to a lot of the rules.
Yeah.
So if there are tighter norms coming in, will Muthoot be relatively better placed?
Maybe that, plus I think in Manappuram's case, the technical factor of the open offer price at 236 might be playing play as well.
Yeah.
And which is why not as much of a downtick. But suffice to say, a good policy, Tamanna, both of us would concur on that, exactly in line with what was needed and anticipated. So no changes on that front, which is actually a good thing. Now time will tell how the markets react to this. As Jayesh Mehta said, though, that if this was a normal time, then it would have been a thumbs up from the bond markets.
Yeah, I mean, the umeed zyada hai is waqt. Is how I can say the expectations are higher. And not surprisingly, considering what is happening in the world around us, IT continuing to hurt. We'll take a very short break. We're coming back with Ask Profit, where your specific answers, your specific questions will be answered. Stay tuned for that and more.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
I would have personally met 100-ish bankers. Almost 80% of them said no.
When you began the idea of Razorpay, how did the idea emerge for you?
It was easier to accept cash than to accept digital payments. It happened a lot by accident. Both me and Shashank were techies. Honestly, we never really thought of a startup or like something like that. We were just techies who used to love to code.
You know, you're painting a picture of a very typical geek. हम ही कोड बना लेते हैं.
हाँ, why can't I build it? Like मैं बना लेता हूँ यार. इतना simple लग रहा है तो सुनने में.
You know those messages you get, oops, something went wrong. People hate saying that.
Average failure rate of transactions in India when we entered in the space used to be almost 30%. Today we are able to bring it down to almost 6%.
So what's the elevator pitch?
We want to be the de facto platform for startups to accept payments. Out of 120-ish unicorns that India has, Razorpay powers almost 105 of them.
Then there is delivery. This stock has also been buzzing in trade. Dealers are indicating that there's a potential corporate development announcement, some acquisition announcement that the company could do when it comes to e-commerce express delivery space. So keep an eye out for delivery as well.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vachhajani, and we'll take you through the next half an hour of trade. And the reason why this conversation is a little bit shortened today is because you probably listened to the RBI Monetary Policy Committee's decision, I should say, and it is in fact a rate cut. Mahima, 25 basis points was being baked in and it did in fact occur. But what more? And that really is the operative part. The change of stance, I thought, from neutral to accommodative is something that gives you a sense, according to the Reserve Bank of India Governor, Mr. Malhotra, of the direction that the policy rates will take going forward. And it's an acknowledgement more than anything else that the uncertainty that's prevailing globally is ultimately likely to have a bearing on Indian economy and growth going forward. And also the fact that inflation dynamics are relatively under control at this juncture. But let's talk about where the markets are. And in the context of global uncertainty, in the context of global selling off of risk assets, 9:30 a.m. today, you had the tariffs kick in, the US tariffs kick in, and you had bond yields in the US spike even more. In the context of all of that, a 0.7% cut for the Nifty 50 is really par for the course. If anything, the cuts in the broader markets are more to the tune of what you're seeing across the globe. 1.5% for the mid-cap index, about that much, maybe a little more 1.6% or thereabouts for the small cap index. And really, a lot of the experts that are speaking to us and have been speaking to us, not just today, but over the course of the last couple of days, are saying, don't venture out and take too much risk. There is too much that is happening that is unpredictable, and things could shift either way. Donald Trump is talking to various countries, or at least his administration is, and there could be some conversation that is in the offing with China. And of course, we are going to be taking a break. Tomorrow is going to be a trading holiday in the context of everything that's happening globally. Don't be brave at this juncture is the view that is coming in. Let's introduce our experts. We've got Rajesh Agarwal joining in right now, and in fact, we will soon have Vaishali Parekh as well. Rajesh, very good morning to you. Let me ask the first question today, and it is in the banking space incidentally, so let me ask that. IndusInd Bank, a few people are still venturing out and thinking of bottom fishing here. Would you say that that's not a very good idea considering the kind of erosion that you've seen in capital? Siju from Qatar has got this question. He's looking at a 1-year time frame. Would you venture out and buy IndusInd at this point, or would you suggest that in the context of the RBI monetary policy decision to cut interest rates and likely more cuts going forward, another bank is a better placed option?
Good morning, Alex. As far as RBI rate cut is concerned, 0.25 percentage, that's 25 basis point, was already discounted by the market. Everybody had an inkling that this is going to happen. That was it was already discounted, I would say. And the best part is the change of stance from neutral to accommodative, that is the positive one. And the inflation targets have been reduced for the first quarter to 3.6% versus 4.5%. That's another positive, and this is going to help the entire banking or NBFC space as such going forward. As far as IndusInd Bank is concerned, I think based purely on valuation parameters till now, whatever stands is, I think the valuations are very attractive. It's less than 1 to price to book and other things. But then you never know what will come out, because when things are not that good on corporate governance part, that's a difficult choice to make. What I would say personally is, if you have a good risk appetite, you can have at least 5-6% of your portfolio into IndusInd Bank, not more than that. It's small part, I would say. If you have a good risk appetite, if nothing comes out anything more from whatever has happened, I think it can give good returns in the future. But again, with a caveat, I would say that this is a high risk counter. One should better look at investing in good corporate governance companies or the banks where the valuations are good. HDFC Bank being the best one, I would say, or even Kotak Mahindra Bank for that matter, in the private sector space. In public sector space, there are a lot of banks which are trading at attractive valuation with performance being very good. For example, Bank of Maharashtra, that has been giving good performance for the last 3-4 quarters. Or a Bank of Baroda, even a large cap one, State Bank is doing very well. So why put money into a very high risk asset unless until, of course, you are a person who is ready to take high risk. These are the counters I would recommend.
Right, got your point, Rajesh. And first caller for the day is lined up. Dheeraj is calling in from Hyderabad. Dheeraj, a very good morning to you. I believe you have a question on Senco Gold.
Yeah, good morning. This is Dheeraj from Hyderabad. My query is regarding Senco Gold.
Okay.
So I'm holding 1100 shares of Senco Gold at 368 rupees.
Right.
So can I add more at current levels?
Okay, got your query, Dheeraj. I'll go to Rajesh quickly. Rajesh, the business update came in today. According to us, the analysis was that gold has already risen 33% as compared to quarter 4 last year. But the growth in retail space has been around 23% only. Do you see this as a negative, or the reading for you for the business update of Senco Gold is on a positive note? And plus, what's the outlook like, of course? Should we continue to hold or add more?
Good morning, Mahima. Senco Gold, if you look at the price, it has corrected quite a lot from its tops just because of the fact there were some corporate governance issue and other things. But at this valuation, I think it's a good buy at these levels. Can move up to 15-20% in the next 6 months or so. Numbers, whatever update they have given today, I think that is satisfactory. The revenue part which you are talking about is just because gold prices are risen so much, that people are reluctant to buy at this point of time, unless, of course, they have some occasion at their family, maybe a marriage or something like that. Otherwise, people are reluctant to buy at these levels. So that's the one of the reasons, I would say. But with the kind of expansion Senco is doing, basically it was a Bengal-oriented company, and then it started venturing outside Bengal also. And this company is doing good. At these levels, I think there is no high risk into this. Maximum due to market condition, it can fall by a little bit, but upside is open. So for 20% upside in the next 1 year, one can go long.
So, and by the way, even if you were to buy, Dheeraj, you may not be able to buy today unless it opens up, right? Because there are no sellers in the stock at this juncture. So bear that in mind as well. The next question is I think it's an interesting one. Suhani is joining in from Delhi. She's asking about Sterling and Wilson Solar, and a lot of people actually don't know this, but very large holder of the stake in SW Solar, which is Sterling and Wilson Solar, is actually Reliance Industries. She's bought at levels of 490, which is elevated levels. She's got 300 shares odd. I think it's the other way around. She's actually bought at levels of